Hey guys, welcome back. Patrick here. I hope you guys got a little bit of healing done. It's a nice day today to have a little bit of reprieve from the big red days that we've had in the past week, which were pretty brutal. I wouldn't be too excited about it quite yet. I don't know if we reach the bottom. We still have a lot of potential negatives in the market. You've got the inflation that's going to continue being a problem, even though, even if Powell says that they're going to be fighting against inflation. Well, the flip side to that is that means potential tapering sooner, more rate hikes, and all of that. So, you have that. You have the Omicron, and that's going to be an issue. You've got the debt ceiling shenanigans in Congress that's coming up in next week. You've got China, so all of those are going to be putting downward pressure on the stock market. Of course, you got the tax loss harvesting. So I'm not exactly sure where at the bottom yet, so I'm a little bit cautious. But today I figured, hey, let's do something a little bit different. I'm just going to show you some of my losses in my portfolio right now, talk about these three different stocks, and what could I have done different. Sometimes it's nice to see that YouTubers, we're not perfect either. We make mistakes. So now you get to make fun of me, right? And maybe you'll share in some of these. So let's get started. I hope you guys enjoy the video. If you do, click the like and subscribe button, and I'll see you after the intro. Alright guys, welcome back. So let's go over some of my losses. Maybe you'll find some entertainment, and maybe we can learn something about it. So at number 3, we've got Tattooed Chef. You guys know I've been covering this stock since last year, and it's not performing well, and I take full responsibility for that. Last year when it was a SPAC, I traded in and out of it, and I did pretty well with it. But when I opened my position, like for a long haul in March and April of this year, as you can see, I bought several times between 1944 and 1605. I mean, that was very, very poor timing for myself. So even if we want to give the excuse of, hey, it's a long-term position, I'm a long-term investor. No. I take full responsibility. My timing was just poor for this stock, and now I'm getting punished for it. So I have 1,200 shares. The average cost basis is $18.85. I'm down 16%, and I'm down 3,600, which now my position is worth about $19,000. So what's going on with this stock? Well, I think we can all agree that eating cheeseburgers and fries is really bad for you, right? And over time, people are going to be eating cleaner. At least that's my assumption. That's why I got into this company in the first place. When I moved here from the US, I was like, oh my gosh, you can go to McDonald's, you can get like a Sunday for $1. You can get a large iced tea, sweet iced tea, of course, and you can get all that for $1. So I actually got I gained a little bit of weight over the first couple of years when I moved here from Canada. And I figured out, hey, I have to actually change my nutrition and everything. I have to exercise a little bit more. So that's why when I saw Tattooed Chef, I was very interested about the company, and I do think that this is what's called a secular trend. Over the next decade, people are going to be eating cleaner than they are now. The same way people are going to buy more EVs than, today. It's exactly the same with this type of company, right? Their products are going to rise over time. Now, in the short term, though, we are really, really struggling. And this company, it's kind of weird because it has some good points to it, but there are a couple of things that you can be very skeptical about. So this is one I bought, and as you can see on the chart, the stock has gone up and down as a roller coaster several times. And that's been an issue for me because, every time it actually went up and I was in the green, I was like, all right, we're safe now. We reached that plateau where we established a base of shareholders. Now it's probably going to grow over time. We're good. But then it starts to crash, and then I'm in the red. Oh, but then we get a big rebound. I'm in the green. Everything's okay. And then we crash again. So that's why I've been holding it, but it's been a very, very tough time as a shareholder for this company. Which, the thing is that I'll tell you what I think about it. So look at this. This is the 58.8 million revenues in the past quarter, and this is great. I mean, 43.5% increase compared to last year. Now, why is the stock going down anyway? I think that the expectations for this company are so high that they always disappoint. Now, let me try to explain that. All right, so last year when I started covering the stock, right, The company had 4,272 stores where their products were in. So over the past year, we keep hearing about them. Hey, we got into Target, we got into this, that store, right? So the store count actually like skyrocketed to over 10,000. They say expected over 12,000 in the third quarter. I mean, I actually track this. I go to Sam's Club, I go to Target, and I see the product in a lot of places now. So you would think the company's revenues are going to be exploding, and yet it's still only like 58 million. I remember one of the YouTubers, you guys know what I'm talking about, said, hey, I think they're going to be crushing these earnings. I wouldn't be surprised if we see 70 million. Well, we're not anywhere close to that. So the stock has not been performing well. And another like problem with the stock, in my opinion, is like people are very skeptical about the management team, which the accounting team for this company has been very, very lacking. You guys know there was a delay in the previous quarter for reporting that spooked a lot of people. But not just that. I mean, even before that, analysts had reported that Tattooed Chef's accounting like department was basically non-existent, right? So this is a company that was private before, it's family run, and they're just not used to being run as a public company. So it's like growing pains. Maybe they're going to be successful in the future, but in the short term, like that's been a big problem. And another issue is I am still convinced that they have supply shortage problems. So they haven't really come out and said it, but you can see it with the products that are available for this company. Like as I mentioned, I'm actually a consumer of this product, right? So my wife loves the acai bowls, and she's a picky eater, but she actually loves those. She makes me buy them every time. Some of the products that I really like, pizza bowl is good. The cheeseburger bowl, I fell in love with it. I mean, I ate it like all week a couple months back. But when you go to the store right now, some of these are not even available anymore. Right, so one of the popular product is the mac and cheese trays. So not the little bowl like this, but the actual family size trays. I haven't seen them in over 6 months of our Sam's Club. Right, so they say that they don't have supply chain problems, but to me it seems like they definitely do, and they're just not fulfilling all of these orders, or I don't know exactly, right? I'm not in the company itself, but it just seems like something is wrong there, and probably the revenues are affected by that. So I'm going to keep holding this company, right? I do believe that over time it is going to improve. They are going to get their act together. But in the short term, this has been one of my worst performing stocks this year, down 16%. Let's take a quick moment to thank people that have signed up for Webull under my referral code, which is in the description. If you guys don't know about Webull, a quick mention here. First of all, you can trade in off hours, which is really useful. Plus, they always give you free stocks. Let me just show you over time. I got a lot of free stocks from people signing up. Here's an example here. We have Asana. I got a bunch of those shares. Well, look at how much it went up to, $91, right? So for free, I got these shares and they tripled in price, even though Asana is getting crushed today after hours. Well, if you guys sign up, you will also get some free shares. You only need to deposit up to $100 and you're going to be getting free shares, and they will probably go up over time. So it is almost free money. Let me know if you do, and let's get back to the video. Thank you. Alright, and now at number 2, believe it or not, you guys know I made a video about Palantir a couple of weeks ago. You guys should probably go watch it if you haven't. Well, believe it or not, this is already my second worst position of the year after 2 weeks. So, as you can see, I took over 1,000 shares from those contracts that I had sold, and now those are down 3,200 or 14%. And then I'm on the hook for another 1,000 shares with sold contracts that I rolled over to January at $23. So these ones are down $1,870. So I actually sold these for $201, and now they're up to $390. So, and these have been really, really bad 2 weeks for Palantir, and I feel like I got completely swerved with this stock. So there's a story behind it. feel free to go watch the other video, but then I'm going to talk about it a little bit more, like what's going on with it. So Palantir is a company that I've been following for 6 months now. I actually did a lot of trades with it, and they were very, very successful. So I actually list all of my trades in the Discord. You guys can look at the Discord and the Patreon if you want, link in the description. And so far this year, I mean, we made pretty good profit with it because the stock has a very good support around $20, $21. Right, so every time we got closer to the earnings, or when I saw the stock was going down, I just sold options around $20, $21, and we made great profit. Well, this time it actually did not hold, right? So the stock is actually down to 1969, even though it actually went up today, right? It went down to 19 this past week. So currently, I'm not doing too well. I'm losing $5,000 on this stock for now. And my position doesn't really change, though. This is a stock that I'm bullish on long term, despite the fact that there are some issues with it. So I don't want to rehash everything I talked about in the other video, but the gist of it is that the stock is very expensive. You know, the company is worth $40 billion right now. Everyone knows that the business model is pretty powerful, right? It's big data. It is one of the only companies that does what they do. And it's kind of like a sticky business. Once the government or a company actually buys into Palantir, whether it's part of the processes, they're going to be using Palantir for years and years to come. So everyone knows that, and the multiple for the company has been very high. And that's why the stock price is at 40 billion now. But imagine when the stock was at $30 and at some point even $40 at peak hype here, right? So the valuation there made absolutely no sense. Now though, we're reaching a point where 40 billions, yeah, it's expensive, but it's not that bad. But you guys know the other problem with it, the dilution. This has been talked about like several times, like this guy mentioned it. Shares outstanding when it went public 905 million, and shares outstanding as of Q2 1.89 billion. Well, that's really, really bad, right? It's very, very bad for the shareholders when you have that kind of dilution. But with that said, there are a lot of positives about the company. I mean, we all know that the revenues are growing. Total revenue grew 36% year over year to 392 million. You all know that the CEO already said that they expect at least 30% revenue increase for the next 5 years. And more importantly for me, like what I specified is my big like focus for this company is their commercial revenues. Right? So they already have kind of a lock on the government contracts. Well, now if they can actually grow with their commercial partners, right, companies that are going to be paying for the product, that's where the growth is for Palantir. So US commercial revenue grew 103% year over year. Now, analysts have correctly question where that revenue is coming from. A lot of these are from SPACs, right? Palantir has been investing in SPACs. In return, the SPACs is using Palantir software. Well, we don't know if that model is sustainable. So I fully agree with the analysts that are questioning like the strength of that. Can we really count on that for, you know, the multiple that Palantir has, which is very, very high? That is a great, great question. But again, like we can't really know how that's going to play out. You have to look at the numbers, up 103% year over year, and go with that. The revenues are up. They're supposed to be above 400 million in the fourth quarter. So the company is making progress. Now, another thing here is I've actually watched at least 5 hours worth of Alex Karp interviews in the past 2 weeks. You know, I have this position that's in trouble right now. I'm like, hey, let's really dig deep into this company and really figure out like what's going on behind the scenes. Because we're not working there, right? It's a fairly secretive company. So let me see what the CEO has to say. And I feel like I kind of learned a lot more about like the inner workings of the company and his mindset. I feel like this guy is, first of all, he's genius level, right? But what really matters here is that he really plays the long game. That can be both good and bad. The good aspect is that they are really getting all the best people. Right? They're looking to, they are maybe overpaying a little bit. They're giving a lot of stock compensation, but the goal is to attract the top of the top, like the best potential like people to work at the company to develop like software that is going to be so good that they are going to be growing for years and years to come. They're not really building software for today. They're building software for in 5 years, right? And eventually the demand will come for those. So I have absolutely no doubt about that. The negative aspect to like this method of thinking and going long term is, well, in the short term the shareholders are getting shafted. Let's be totally honest. That kind of dilution, I think they are aware that it's not sustainable. Right? You just can't go from 905 million shares to 1.9 billion. Oh, didn't mean to do that. And have the share price actually go up steadily over time. So I think that they're aware of that. Like, one of the good things is that for several years now, even in the interviews, that's what he was saying, they didn't even rely on a sales force. Like, it almost seems like he didn't want to sell the product. He was trying to sell it from word of mouth. Like, one company, the employees saying, hey, we really like that product, maybe you should try it. And then that other company would come to Palantir and see if it worked for them. So now he realizes, hey, we're a public company, we do have to actually generate returns for the shareholders. Yeah, it's great that they got liquidity for their own employees that have shares. Well, now, everyone is part of the company as a shareholder. So I think he realized that he needs to increase the revenues and make it more like public friendly. So they did hire a team of salespeople, and I think that they are going to heavily work on the commercial side of the business. So we are going to be needing to monitor this very closely quarter after quarter. Are they making good progress with commercial customers? Not just the SPACs, but actual real businesses. So there was a new announcement today that they are going to be working with Kinder Morgan, which is involved with like pipelines and things like those. They have the new module for cryptocurrency. Those are the type of contracts that we're going to need to see and monitor. And if they can actually get more of these, Palantir is going to be very successful long term. Not only is it going to grow into the current 40 billion valuation, but at some point it can become a 500 billion plus valuation. So this is another one where right now I'm getting crushed, but I'm going to be very, very patient with this one. I can just sit on it and actually sell covered calls and everything, as long as you're not buying options where you are very, very at risk, because you have to predict not only the movement, the speed, and the strength of the movement. I mean, when you're just holding shares and you're selling options, you just take them, sell covered calls, and you bide your time until the next leg up for the company. All right, and now for the worst of the worst, and I'm gonna hide my head in shame for this one. Please don't roast me too bad in the comments, because this is pretty embarrassing. I've got MYPS, PlayStudios, where I have 2,000 shares. Average cost basis is 6.67. Well, right now the share price is 402. I'm down 39.77%. Or 5,300. Now my position is melted from $13,000 to $8,000. And worst, the stock is making new lows over and over and over again. This morning it went up to 391. So we got a little rebound in the close, but it's really, really been painful holding this company. And what's worse about it is that I made a video on it a few months ago saying, is this the best SPAC under $10 right now? And I knew that there was a strong possibility that the stock was going to go lower. Like, I even wrote it in the title, hope it drops to $6 first, because I wanted to buy more of it. I mean, I'm not completely stupid. I see that the stock was in a downtrend, but I never imagined it would go down to $4 or lower, right? When the stock was at $7.50-ish, I was like, hey, I'm just going to buy a little bit more. It's going to stabilize at $6 or so. There's very good catalysts for this stock, so it's going to be fine, right? I'm going to do really well. Over time, it's going to grow. Very limited downside, a lot of upside. Hey, let's get into it and buy some shares. Well, little did I know that it would go down to $4 or less. And yeah, there's some little periods when it went up to $5, but then, it just goes back down, like today with a new low. So what is the thesis for PlayStudios and what's going wrong right now? Well, the thesis is very, very simple with this one. It's all about Kingdom Boss. So the company makes games mostly for mobiles, right? A lot of them are Vegas style games. So you have Vegas Bingo, Vegas Slots, Konami Slots, all of those. So the company has a strong base already. They're already not necessarily profitable, but they generate revenues. And the idea here was, well, the company has a base. Now, anytime they add new games, that's just going to be more revenues, so the share price is going to go up. I feel like that theory makes sense. So the big game that they were working on was Kingdom Boss, and my thought was, well, when Kingdom Boss comes out, which is kind of like AFK Arena, which is a popular game on mobile, the revenues are going to grow, and I'm going to start seeing like a return on my investment. I already could pinpoint a catalyst that would be positive for the company. Well, so far it's not really working out because, first of all, Kingdom Boss keeps getting delayed, which tells me that the company is not able to stick to their timetable. And when you actually look at it, first of all, it's not available in the US yet. But when you look at the reviews, is where I've been following it for a couple months now, just looking at the reviews, you can tell there's a problem with the development. Like the studio that's actually working on Kingdom Boss for Play Studios, they suck. They just cannot fix the bugs and the glitches, so the reviews are horrible. Now, obviously, right, it's the same thing for every app. People that are unhappy with a product go and write reviews. So you got 3 stars, 1 star, 1 star, 1 star. But it's when you actually read the reviews that people say, hey, the game is fun, but it keeps crashing. And not only does it keep crashing, when you reach the end game, like for, the game right now, there's nothing to do. Well, that's kind of a big problem when you want to actually monetize the game long term, right? So that's why they keep delaying it and delaying it and delaying it. Now, the CEO has said that they were going to launch it by the end of the year, but what's the point of launching the game if everyone actually hates it because it keeps crashing? It's going to be a failure rather than, a big success as we were anticipating. Even if the revenues are up, it's not going to be sustainable if the game is not fun to play. So that has been a big problem, right? And at the same time, the company's market cap is 506 million right now, and the company has over 200 million in cash. So the valuation is so ridiculously low that you would think, hey, this is like a no-brainer, right? The risk versus reward is amazing, but they just haven't been delivering so far. Hey, we got some really great news over the past week. You would think that, that would really help us. They're going to be working on a new Tetris franchise game. Tetris, really? I mean, I was looking for, a new exciting game that was going to be really making a lot of revenues over time, that was going to wow the investors. We're getting a new Tetris. Maybe it's a first step, but it's not exactly overwhelming or anything. I'm not super excited about it. So I hope that the company can actually fix Kingdom Boss and they can release it by the end of the year. I hope the game's fun. I'm going to be playing it. I'm going to be testing it out. But so far, this company has been a complete disaster, right? And again, you look at the analysts, they see the same thing I do. On paper, this company should be really, really good, right? The price should be going up. One of the analysts had a $13 price target for the company. When you look at the revenues, they already have some. They're not losing money every quarter. So why is this company not performing better than this? Well, it's just the way it is. Some companies are popular, some companies are not popular, and this is one that so far we haven't been rewarded at all. So I'm going to be holding it. I'm kind of like a bag holder on this one. I feel like it's kind of silly selling it right now at $4, but I'm kind of stuck with it. I can't really sell covered calls on this one because now what am I going to do? Sell $5 covered calls and get almost no premium on it. And if for some reason they announce a big acquisition or something, then it jumps and I miss it. So I'm kind of just holding and bag holding this one, and we'll see what happens. Maybe I'll sell it for tax loss harvesting, because I can actually get a pretty decent amount if I sell this, and 5,300, I'm going to be saving that on taxes. We'll see, but I'm not really excited about this one, and that has been my worst position of the year. So what is yours, and what do you think about these? Let me know in the comments. I'll see you guys in the next video.